There's something very important brewing in Washington, D.C. right now, and it could affect the millions and millions of people who are in forbearances and who are unable to pay their homes because of COVID. We might be witnessing something that I've never seen before, which could be the end of foreclosures as we know it. It's very possible that the government's about to pass a regulation that's going to limit the foreclosures for many years to come. There is something called Regulation X, which the government now is manipulating and asking for comments as to whether or not they're going to do this very important manipulation of this regulation that would basically limit foreclosures for the entire year, meaning no foreclosures until 2022 and beyond. My name is Diego Mendez. I'm a bankruptcy, loan modification, and foreclosure lawyer here in Miami, Florida. I've helped thousands and thousands of people throughout the years since 2008 with foreclosures and loan modification issues. This is something I've never seen before. I think that right now we're living through a very important time, and I'm going to explain to you what I'm seeing and what the regulations might look like. My show's called Debt Law, the Survival Guide for the Desperate Debtor. I please ask that you subscribe and like my channel, because I'm going to be talking about this issue and other loan modification and foreclosure issues throughout the year so that I can help you navigate the post-COVID financial crisis. Like I said, there's something brewing in Washington that we're starting to see that the federal government has a lot of power over foreclosures that we did not understand before. When I was representing people in 2008 and beyond, I saw a lot of people lose their homes because the government was forcing them into applying for loan modifications that were basically impossible. A lot of people were forced to apply for loan modifications on properties that were severely underwater, and there was no way to actually modify the mortgage in a way that the people could afford it or that it made any kind of financial sense for them to keep the homes. So a lot of people lost their homes. Now we're in 2021 and we're looking at something similar happening. Right now there's 2.1 million people in some sort of forbearance or in some sort of default situation with their homes related to COVID. These folks are seeing a very similar situation as to what happened after the 2008 financial crisis. The difference is that we're seeing that the government actually has a lot of power to turn foreclosures on and off. Who knew that they could do a regulation, change a law, and all of a sudden there are no new foreclosures? That's what we're looking at right now. There is a proposed rule that would change the something called Regulation X, which is a rule that deals with all mortgages in the United States. It basically creates brand new foreclosure protections for people who are in forbearance and who are unable to pay their homes because of COVID. I'm going to go through the rule changes. This is not something that has been approved yet, but given the political situation that we're in, I don't see very many opportunities for this to be limited. So I'm guessing this is probably what's going to end up happening later this year. The first thing that they're looking at is creating something called a pre-foreclosure review period. This basically means that the mortgage servicer has to, before they give you the notice that you've defaulted, which usually happens 120 days after your last payment. Before they can give you this notice, they have to review you for many different things. Now, they've extended this through the end of 2021, meaning that there is no way that any new foreclosure would happen until 2022 and beyond. So, this is an extremely important thing. Bottom line, if you are right now in a foreclosure situation where you're unable to pay and you have not received that first notice, that notice is the first thing that they send you saying you've defaulted, we're accelerating your loan, and we're moving into a foreclosure position. If you have not received that, then you will not receive it this year. Meaning that they cannot start a foreclosure against your property until they give you that notice, which has to, at this point, happen next year. Now, in that pre-review period, the bank has to look at all the different options that they have and try to offer you a loan modification or forbearance or something or some sort of repayment option so that that's something that you can afford to keep your home. This is huge. This did not exist in 2008. There was no limitations as to when a bank could start a foreclosure. If you were late, they accelerated and they started the foreclosure. That's what happened. That was it. That's not going to happen this time. If this law is passed, if this regulation is passed, there will be no new foreclosures until 2022. The other big thing that happened in 2008 was a lot of people who could apply for loan modifications were put into this arcane process of submitting documents and sending applications and filling out forms, and a lot of people can't handle that. A lot of people cannot handle filling out forms and submitting them on time. I understand that. That's why lawyers exist, that's why accountants exist, that's why all the service professionals exist who do this kind of work or any kind of work that involves forms. So the new regulation would create a system of no document or incomplete document loan modifications. They would basically offer you a loan modification which lowers the interest rate, extends the term up to 480 months, which is 40 years, and capitalizes all the old rearage, which means that they would take all the late payments and put it into the new loan, either into a balloon at the end or some other form, and basically give you the loan modification with no application. This is huge. This did not exist in 2008. In 2008, if you wanted to have a loan modification, you had to apply for it. This is not to say that all applications are going to go out the window, but the bank has to try to at least offer you something without an application initially. If they're able to do that, then the bank will offer you something. The other big thing is that this offer cannot increase the mortgage payment. Now, don't get too excited. The bank's not going to give you anything for free here. It is still very possible that by manipulating the mortgage, it is impossible to create a loan modification payment that does not increase the payment. So this is not a windfall for everyone. However, for a lot of people who would have lost their homes because they did not understand the modification process, this is a very important thing. If this comes to fruition, that means that a lot of people are just going to one day walk into a situation where they're going to get in the mail a loan modification offer, and they're going to be able to accept it and then move on with their lives by making this new payment. This is a pretty big deal. It's exciting for people who have loan modification issues, who cannot pay their homes. The other big thing and the big problem that happened in 2008 was a lot of times the banks would just send people these letters or these packages in the mail, snail mail, and the homeowners were expected to open these big envelopes up and understand what they were getting. This, honestly, is a mistake, because when they send people letters, a lot of people are not sophisticated in the sense that they don't fully understand what it is that they're reading. So a lot of people just threw these letters away. They just look like bills, they don't want to deal with them, and they threw them in the trash. This is not going to happen this time around. The banks are off. The banks have to make a live contact, meaning that the banks have to call and speak to you before they can do anything with your loan modification or your home in some sort of repayment. So you're gonna get a phone call from the bank, and they're gonna talk to you. They're gonna offer you different things. They're gonna explain to you the different options, and they're gonna have a live conversation with you. This is a very big deal. It seems like a small thing, but I'm telling you right now that I have countless clients who had loan modification offers sent to them in the mail, who never received them, or when they received them, they didn't know what it was, so they just threw it away like everything else. A lot of people do not like looking at those envelopes because it just reminds them that they're late on their mortgages, so they just threw those things away. Those people, basically, because they threw away the document, they didn't do what was required of them, then basically those people were denied their loan modification and lost their homes for the simple fact they didn't sign something or didn't open something. This is very unfair. I do agree that this is a problem, and this is something that hopefully will resolve a lot of the problems that people had with loan modifications this next time around. Now, the next big thing that they're looking at is expanding the definition of a COVID-related emergency. What this is going to do is, a lot of people were in the past asked if it was if their request for forbearance or the fact that they cannot pay their mortgage was a direct effect of COVID. A lot of people couldn't say yes to that because, it didn't really, maybe they didn't get COVID, maybe their company didn't close for COVID, but they still couldn't pay. Now, they're expanding from direct to also include indirect. Indirect, in my mind, as an attorney, means anything, because everything is indirect. So, therefore, they're expanding this option to ask for a loan modification at the end and basically get a loan modification to everyone. Anyone who's in foreclosure anyone who is in forbearance, anyone who is unable to pay their homes. This is a very big deal. This rule change is happening. It looks like it's going to be passed over the summer. If it is, there's going to be a lot of people who are going to be surprised that they're going to get a loan modification in the mail without application. Now, big word of caution here. Do not let your guard down. You still need to pay attention to your case. You still need to open everything that comes to you in the mail. I've said this in other videos. Opening your mail is very important because you have no idea what the bank is doing unless you open the mail. This call thing that they're talking about, it sounds great on paper, but they're not saying that they actually have to say anything to you beyond making the call. They're supposed to call you and explain things to you, but a lot of times they call and then they don't really explain, or you don't really understand, and then you miss your opportunity also. So it's important that you also open your mail and you answer the phone. No one likes answering the phone when the bank calls. I get it, I understand. It's a bill collector calling you, asking you for money. These calls are different, however. They're trying to help you, supposedly. So, answer your phone. Make sure that you talk to the people that call you, because if you do not talk to them, then they're going to make decisions for you. And eventually, all of these things are going to run out. We're being put in a situation where all of 2022, there will be no new foreclosures. I'm sorry, all of 2021 into 2022. However, at some point, this will end. Now, it's very possible that even in 2022, this will extend. It is a election year, and we never know how that affects things. It's very possible that if still people are in a forbearance situation, that this keeps going on forever, or at least for many, many more months beyond the beginning of 2022. But for now, this regulation stands the way it stands. And if it changes the way it looks like it's going to change, a lot of people are going to have an opportunity to get a loan modification in the future that would not have gotten it otherwise. This is a big deal. Again, my name is Diego Mendez. I saw a lot of this stuff in 2008. I kept thinking to myself, well, if these, and I would talk to people and I would think, well, if these people had just opened their mail, maybe they wouldn't be in this situation. But hopefully these new regulations change all that, and if people are able to get loan modifications and able to deal with the banks in a better way than they're dealing with them now. I am a bankruptcy, loan modification, and foreclosure lawyer here in Miami, Florida. I've helped a lot of people with these problems. These problems will persist. We're going to get a lot more of these issues into the future, but hopefully these regulations will help people navigate the process and help people save their homes. Please subscribe to my channel. I'm going to keep doing videos on this subject. I'm going to be focusing on different types of loan modifications, the different kinds of servicers like the VA, the USDA, Fannie Mae and Freddie Mac, and others. Please subscribe and like my videos, and I'll keep making these videos for everybody. Have a wonderful day, and thank you very much for watching.